All right, everyone, here is a new video for you guys. I've kind of touched on this in the past. It's basically how do you incorporate multi-time frame analysis into your trading. As I've often noted, you can't just trade based on one chart. You need to have a view of the higher and lower time frames of the ones that you're trading. So uh, I use actually four because I like the big picture and I like the small picture and the two in between. So here I'm going to start with YM only because it's a clean chart and I don't have a lot of trades with YM. But I want to show you here that this is the daily. Now I have my MACD, I have my RSI moving average, which as I explained in the RSI video, that's basically a 30 EMA for those who don't have this reverse engineering RSI. And I also have up here my coded tabs up here to show a label for when RSI is above 50 and below 50 it'll be green. Trend is bullish, again above the time frame you're trading. So this is a daily, and it'll change based on the various time frames. So anyway, so this is a single chart. So by looking at a single chart, it really doesn't give you a lot of information. You know what's going on this time frame, but you don't know what's happening in the lower time frames. And as I've explained before, trend changes start on the lower time frames, and then they build into the corresponding higher time frame next, and it just progresses from there until it gets to the bigger time frame. So, for instance, you'll start seeing maybe a divergence on the 50-minute chart. After 15 minutes, you take a look at the hour chart, and all of a sudden now the hour chart is starting to turn bearish by making lower highs and lower lows, or vice versa. And it's basically a progression of how price works, but it always starts on a lower time frame. So you got to know what's going on below to know what may be coming above, right? So this single chart really doesn't tell us much other than what's happening right now on the daily. But we have no idea, looking at this candle, all the different time frames within or really above, because we have a weekly time frame that's even higher, right? So what I usually do is I have this 4-panel chart, and I'll just show it to you now. And you can see this is basically what I look at most of the day. And I have my MACD, my RSI moving average, and my RSI labels up here just to kind of keep track of the trend. Now you don't really need these labels because you kind of know above the moving average. That means it's positive, right? It's when it drops below that you'll see this turn red. But you don't need to have that. It's just a visual for me to have it. And sometimes I want to see how extreme it is. You can see here we're above 70, but we're not above 70 on the daily. You can see we're slightly below, or slightly above 70, but lower than the high on the 15-minute RSI. So the idea, though, is to give you a view of what's going on. So excuse me, I wanted to try to make this as brief as possible, but you have to use, as I explained before, the RSI as your guide in conjunction with support and resistance and possibly price action patterns, fib levels, whatever analysis or technical analysis that you can use to kind of give you a probability of something happening. The more you have, the better, right? So if you could have price coming into support, and it's also coming into, I'm talking about price support like here, or or end coming into RSI moving average support the same area, you know you got um, a double shot here of support, and that's that's going to be strong. If you see up here, you have support, but RSI is down here. It's not going to be as strong. And the same thing here. You have resistance, price resistance, and you have RSI resistance. So you have a double confluence. And if you had fibs in there or something, whatever it is, or perhaps a trend line, the more things you have to give you a higher probability of that level holding or not holding, the better your trade is going to be, right? The better probabilities. So in order to do that, you kind of got to know also, what's coming. So here, for instance, you can see, the daily here is kind of going sideways. We kind of broke above the high, and so we closed the year up out higher in 2020. But if you look in the 4-hour, you can see really there's been like a consolidation. So I don't know what time frame you guys will be trading, but it doesn't make a difference. This covers them all, except the weekly. You could adjust that. If you want to make this the weekly and this the daily, and this the 4-hour and this the 1-hour, that's fine. But use 4 time frames, and that goes down to the 3-minute to 15-minute, half hour, hour, whatever it is that you guys are trading. I trade mostly the higher time frames. I usually never really trade less than a 1-hour time frame. Really, the 1-hour and the 4-hour, my bread and butter. I do look at the 15-minute because, like I said, that's going to tell you what's happening or what's going to be happening possibly in the higher time frame. So, for instance, here you can see we had a clear consolidation here, right? We had this box. And this is a range box, consolidation box, whatever you want to call it. I call it different things. I just call it a box to be short. And you can see we're ranging here. So if you were basically a scalper here, you would have shorted resistance, went long at support until it breaks. Now this is obviously you're not using the RSI here, but you're using support and resistance, which is more important. The RSI really is just, like I said, a guide. And as I explained in the RSI moving average video, when price is above or sustaining above, the trend is bullish, right? So you don't want to really be trading against the trend unless you're seeing something that's telling you that trend is going to come to an end. And that basically is a divergence or some fib retracement level perhaps. But the smarter trade is usually to just wait for it to pull back, and as long as it holds above that RSI moving average on the time frame you're trading, that is a place to add. So you would add or buy and enter, and vice versa if you're short. So you kind of got to use this with a little bit of common sense. You can see here we're extended. You can see the MACD is overbought. It's still going up. Now, if I went down to a 5-minute, I bet you we're probably going to see some kind of divergence. So let me go here to a 15-minute just to take a look. So I'll make this the 15-minute, and I'll make this the 5-minute. And there you are. See, you had price making higher highs. And the MACD is telling you, well, that's going to run out. And it pulled back, right? Came up from, it wasn't a big move. It was a 5-minute chart, 30.52 to 30,524 to 30,469. But still, that's about 50 points. And if you were shorting here, you would have had a target somewhere around this support area. So one of the tricks of the trade here really is to kind of look at the lower time frame to see what's coming in the higher time frame. So you can see now we have this divergence, kind of broke down. It's just starting, hasn't even really gotten to support yet, which would be right around here. Um, but it hasn't carried over yet to the 15 minute. 15 minutes just showing oversold. So it's not giving us a trade signal if we're trading the hour to 4 hour. But if you were trading this 15 minute, you may say to yourself, hey, wait a minute. If we break this low here, if we break this low, well, that's a short opportunity for a few points, probably down to this next support level. But again, the time frame is going to dictate the move. Small time frames, you're going to get smaller moves because it's not going to go straight up or straight down. It's going to zigzag. And you don't know if the zig is going to last or the zag is going to come in and take it out. So when you're trading these lower time frames, you're just really scalping for a few pennies. That's not my thing, but for you guys that like that, then that's what you should be doing. So anyway, so we go back to the 15-minute chart here, and I'll go back to the hour here. Take that off. All right, so if we're trading this 1 hour and 4 hour chart, what we want to see is that we want to see price come down here to this area here, because this was obviously a breakout area, right? So that is resistance that will now either become support or it's going to fail. But since we're in an uptrend, right, we're above the RSI moving average or 30 EMA, whatever you're using, the trend is bullish, right? So right now we're looking for long trades. So when it comes back down here at 30,330, you can see it's coming right back down to the 1 hour RSI moving average, which is also support and also the top of the range. So it's going to be a back test. If it fails, fine, but the idea is until it fails, it's going to be support. And if you look at the 4 hour, that 30,330 is right here between the zone. And you can see the 4 hour RSI here is at 30,283, so it's a little lower. But on the bigger, higher time frame, you can see this zone goes all the way down here to 30,232, which is same thing as it is down here. But you can see it so much clearer on the higher time frame that this is clearly support. Remember, it's not a support and resistance aren't exact precise levels. They're like areas. So you're gonna sometimes poke a little bit below, poke a little bit above, but the general area is right here. And then you got to figure out, well, where, if you're going to use a stop loss, where do you want to put your stop loss? And that depends really on your risk management, right? And how much risk you, not management, but your risk tolerance. So how much risk are you willing to take on this trade? Now, you know me, I dollar cost average in, that's part of my risk management. So I seldom use stop losses unless I'm scalping something short like this, where I would just do a breakout here, and my stop loss would be right here at this low. And I'll do a video on stop losses. I know a lot of people haven't struggled with that. But I don't use them on a normal basis because I said usually I average cost in, so I'm not jumping in to any position with both feet. I'm dipping a toe in at a time because, as I explained when you read the dollar cost averaging notes that I wrote, I'm assuming my entry is going to be wrong, and I think you're safer doing that because if you think you're right, then you're willing to bet more than if you doubted yourself. And since the market is designed to fool most of the people most of the time, I think you're probably a little overconfident to think that you are going to be smarter than Mr. Market, because you're not. And you are going to get stopped out a lot. So rather than do that, and again, this is after years years of beating my head against the wall, getting stopped out, and watching price then reverse after it stops me out and go the direction I was in the first place. I learned that you know what, you can't get greedy. You can't try to get in with both feet and look for home runs. If you're trading futures, you trade one contract at a time, maybe two if you have a big account, and then you add one contract at a time, or two. You don't jump in with eight because then what do? You can't average that in unless you add another eight to make any kind of sense. That gives you 16 contracts. That's crazy. That's crazy. The only only way that works is if you're trading something that doesn't require a lot of margin. But ES or YM, the E-mini indexes, they're all big money. 10, 12,000, 17,000, whatever it is, per contract. If you're trading natural gas, it's different. It's like 4,700 or 4,500, whatever it is. Two contracts is half of one of NQ. So it really depends, but it really, to me, it doesn't make a difference. I'm always looking to start off with one entry, one contract, and build on that as needed. So anyway, back to this multi-time frame analysis. You can see it here that this was coming in to 4-hour resistance up here. So while we had this breakout, if you're looking at the higher time frame, you already knew that resistance is up here. You didn't even have to see it. It was on, you should have had it drawn on your chart, which is why you have to put these levels on your chart, right? So you can see that this is the 4-hour. 4-hour is a higher time frame than 15-minute. That governs. And you can see we poked above it just a little bit, but not much. And then it came back down, and it's just sitting basically right on it right now. Now, is it going to go up? I don't know. If you look here, you can see, like I said, on the 5-minute before, it looks like it's headed down lower. We are a little overbought. So I think we're going to come back here. And then from here, we're probably going to bounce unless somehow this doesn't hold, this support area doesn't hold, and this whole thing breaks, and this is done. So here's the hour chart. You can see also the little overthrow. And again, these levels are areas. They're not exactly precise. I'm sure if I went to the exact price here, and it would be a little closer. But it depends how where you draw your lines. And I always look at areas where there's multiple touches, and you have this this nice rejection here. So this gave you this whole zone that's going to be resistance. And sometimes it pokes through, like you can see right here. It went through, but came right back down. But we're at prior resistance turn support. Now the daily doesn't really help you here because you're not trading these off the daily, but you want to see that the daily now is making a new high, or at least just broke over that last high, recent high. So what you're looking for in the daily is, well, where is the major support? And it's all the way down here, right? And there it is on your screen. So this is the 4-hour. You really can't see it on the 1-hour because it's a lot lower, but you have to zoom down and you'll see it's all the way down here. But you don't need to, as long as if you have these 4 panels on your screen, you'll know, because even though you're not watching the daily, when it comes back down here, you'll see on the daily that it's right here. And this is what? Another buy area, because we're at support. Support is support until it breaks. Resistance is resistance until it breaks. So again, it really depends on the time frame you're trading. If you're trading the 4-hour, you're still long here, right? Because you're above the RSI moving average. You're above the recent resistance level. But you may want to consider taking profits here and waiting to see if it pulls back, because the lower time frames telling you you're going to pull back. The size of which you really can't tell, but you think it's going to be somewhere around here, right? High probability it's going to come back here. So you can either take profits or you could write it out and maybe add on the pullback. This is all based on how you manage a trade when you're in, and that's really up to each individual trader. I have my way of doing it. You guys may have your own. But if you're not looking at all four of these time frames, then you're doing yourself a disservice, and you're not getting a full picture of the price action and how they're all interconnected between the higher and lower time frames. Now, what you can do is, because this is I just have default here, you could change this. Save this as daily, let's say daily plane, right? And just take off the price levels, because what happens is, if you have the same chart in all four panels, you're going to get overlap on the zones. So you could rename them or keep them the same as far as the 15, 1 hour, and 4 hour. But when you get to the daily, you're better off naming it a different chart, because this way you could avoid having all these little lines showing up on your chart. So right here, you can see this zone you're looking for, or area you're looking for, is you have resistance up here and you have support down here, right? This is prior resistance, broke through, turn support. Above here is going to be a breakout, and probability favors higher unless you start seeing the lower time frame lower lower lows and lower highs being made, right? And that's going to signal a change of trend, because it'll start on the 15-minute, work its way up to the 1 hour, and then the 1 hour will turn into the 4 hour, and the 4 hour then carries over to the daily, and the daily into the weekly, yada, 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 assuming it continues. It could stop, right? So right now, by having this separate chart, a different name on this chart, you can just clearly see that, if you're trading daily, you really got nothing to worry about at this point, because you're well above support. Any pullback is going to be a buy until the support gets broken, or this next support below here gets broken. Again, you got draw your lines here. Where is support? Well, you can use the close candle close, or you can use the wicks. What I try to do is try to find just that area where I'm getting the most touches, and right here it looks to be about right, because you got close here, pierce through, couldn't hold, just about there, so I think I said give or take a point or two, and this is clearly, it was clearly resistance. It broke through, didn't hold, broke down, broke above. Again, tried to break down, popped up, kind of chopped around, it held, went up, poked through, and this is what happens. This is why if you have a stop loss here, you just got stopped out. If you don't, then you survive the trade. You didn't have to waste your money on a commission, and you're back in a trade an hour later after it bounces. So that's why I personally don't use stop losses unless I'm scalping for a few pennies, dollars that I want to get in and out real quick, or I'm already maxed out on the size of my position. So in other words, if I said, look, I'm going to trade 5 contracts, and I'm 5 contracts in, and I really don't want to add, well, then I'll add a stop loss, because if it goes against me, I don't want to add any more money, because I'm going to add more risk. But until I get there, and sometimes I don't, because I'm only carrying 2, 3, or 4 contracts, I have room to add, but I'm just not doing it, because I want to just wait it out. And also, as I explained in the dollar cost averaging explanation, You can't add every few points. It has to be significant enough away from your entry level or your average cost, or if you've added already, for it to make sense, right? Because you're not going to change your dollar cost average much if it's only a couple of dollars away from your entry. All right, so on the daily chart, you can see we clearly hugged this support. Uh, this just held basically, except for this one little poke. It's held this RSI moving average, and price is just ticked higher. All right, so again, this works on any combination of time frames you want. I usually kind of double or quadruple the time frame. So if I got a 15-minute, I go to an hour. If I got an hour, it's 4 times. It's a 4 hour, and a 4 hour. The next one only is really the daily. You can use an 8 hour, but I don't use that. And if you want to use the weekly and the daily, or the monthly, the weekly, the daily, and the 4 hour, whatever floats your boat, depends on your time frame. If you use swing traders, you have to focus on the larger time frames. Forget anything under 4 hour. Just forget it. You just look at the 4 hour, daily, and the weekly. I mean, you could look the monthly, could be the lower one, but really, that's like the 15-minute to me. If you're trading the weekly. So those little moves don't mean much, here if you're trading the daily. Depends more on what the 1 hour and 4 hour traders are doing. But immediately, it's always the next one up. So you'll see a bigger reaction here because it'll come back down here, but you won't see that until it gets down to 32.32 on the 4 hour. But that's all the way down here on the 1 hour, you see? All right, so this video has gone on long enough. I hope you guys found this helpful. Any questions, as always, just email me or post it on the site, and hopefully this will give you guys a better understanding of how how to use a multi-time frame analysis in your trading, and give you an edge in your trades.